Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools aren't, so let's get started. So this is another stock market weekly recap, guys. If you've been following us, welcome back. And if you haven't, what we do is we look at the previous week, see how the stock market did, look at some important news stories, look at some individual stocks, mutual funds, see what happened. So let's get into it. Now, hopefully you had a great week, guys, but a historical moment happened in the stock market this week. It finally happened. The Dow Jones zoomed past the 23,000 mark. It was ridiculous. It went higher and higher and higher. Basically, the whole week you could see. But for this week, it went up around 1.7%. Now, earlier in the week, it did kind of top 23,000, but closed just shy of it. But then throughout the week, it did zoom past it. And that does show that the market has some pretty strong velocity of moving upward. You could see the other index that we're following, the S&P 500. They did fairly well as well, up 0.85% this week. Little crazy stuff going on Thursday. We'll get into that. But overall, it was pretty good. So the biggest news story, obviously, was the Dow topping 23,000, which is awesome, guys. Of course, long term, keeps going up, so doing very well. But what else was going on? I did see a news article talking about if the stock market is overvalued, talking about the valuation of the stock market. And some people think it is slightly overvalued. Now, a lot of people say there could be bubbles out there. Some people saying there's a real estate bubble. There might be a stock market bubble. A lot of people are saying Bitcoin, that virtual currency, might be the thing of the future. They're saying that could be a bubble. But no one really knows what a bubble is until it pops and comes crashing down. Now, as for the stock market, if you look at actual valuations, a lot of people look at the PE ratio. That's price per earnings ratio. Historically, they are kind of higher than average at this moment. So I do kind of believe that it is slightly overvalued. And this isn't a bad thing, guys, but I am expecting some type of correction to happen. This could, like what Trump is trying to do with the tax reforms, people are wondering if it can happen before early next year. We'll just have to see what happens with that. If it does good, the market could go higher. But if it doesn't, this also could create a stock market correction, could go down like 5, 10, 20%. So a good correction or a drawback of the market is actually a healthy thing. When it becomes undervalued, people would buy more into it, and then you could grow your money even faster. So I actually welcome that happening. Now, it's not like I'm pulling all of my money out of the market thinking that it's slightly overvalued. You just have to prepare for it. Have the right stocks. If you have dividend stocks, those are your best friends because you continuously get those dividends. But I'm going to stay in it, obviously, for the long term. Some people say to get out now, and then when it corrects at a lower level, buy in at a lower level. That's an easy concept. But a lot of people, it doesn't work out that way. Here's the thing. Usually, when you sell, you're not going to get in at a lower level. A lot of times you wait too long. It's like, oh, will it go lower? You don't know what's going to happen. So you wait and wait and wait. And by the time you wait and finally get back in, it's actually at a higher point where you began. So I'm not too scared, really. The main question that a lot of investors are looking at, though, is the tax reforms that could be happening. So that's enough about that. Let's get into individual stocks. I know that last week, but we were looking at Netflix. Netflix did very good in the previous weeks, and their earnings ended up coming out on Monday. So this is Netflix for the week. On Monday, they were up because of their earnings, but then throughout the week, it kind of just went back down. So that's the thing. During earnings season, it could go up very quickly or down very quickly. It is very volatile during that season. But you could still see for year to date, it's doing phenomenal, over 56% return. Now, another company that reported earnings and did very, very well, actually, is a company that a lot of people may know, maybe not by brand, but the things they actually use. Boom, Johnson & Johnson. Johnson & Johnson has so many different brands, guys. We use them on a regular basis. Some of the things that they have are like Tylenol, Advil. They have a bunch of, different types of, like Band-Aid. Bunch of different brands. But you could see on Tuesday they went up very nicely due to earnings. This week they're up over 4%. And this year they're actually up over 23%. I actually have personal funds in Johnson & Johnson just because they're a brand that was around for like ever. It's one of those safe picks because every single person uses them no matter what the market is doing. So that's why it's not as volatile as maybe some other stocks like tech stocks. And they have good dividends. So I think that's a good long-term play for safer investors. So let's finally get into the stocks that we usually look at. Boom, Apple. Apple, oh my God, guys. Alright. For this week, Apple is down almost around 0.5%. On Thursday, it did get slammed over 2%. I'm going to tell you why in a couple seconds. It was ridiculous, but still year to date is doing good. Closing at 156.25. So, Apple news on Thursday is that the demand for iPhone 8 sales are not impressive. People were using the word anemic for the sales of iPhone 8, and obviously that's not attractive for investors of Apple. They want these sales to be good, right? So obviously this made the shares drop, but people don't realize that the iPhone X, iPhone 10, whatever you want to call it, is coming out next month. People aren't buying into the iPhone 8 because of the iPhone X is coming out. They're waiting for that to come out and buying that. They're not focusing on iPhone 8, so their sales should be anemic. They shouldn't be exciting at all because they're waiting for the newest and the best phone to come out. So this drop in sales, drop in stock price because of this idea of low iPhone 8 production is just ridiculous. The fact that it drops, so it's not huge or significant, but it did move it a bit, and I think it's just nuts. Don't worry about it. I'm probably sure as hell that iPhone 10, X, whatever, is going to do very well on sales. Long term, it's probably looking great. Sorry, I was just like amazed of how drastic the stock price changed because of this kind of insignificant news, but whatever, we'll see what happens. Moving on to the next stock, Disney. Disney did pretty good, actually. I wasn't really looking at them too much, but they did go up, just over 2%. Still negative for the year, though. Watch out for those Star Wars, though. It's coming out soon. Moving right along, getting into some tech stocks, guys, is Facebook. You could see that Facebook is up 0.7%. You could see that drop on Thursday. The stock was, stocks in general, the stock market was going up and up and up past the 23,000 mark. Then there was a slight pullback in basically everything on Thursday, along with Apple. That was the main trigger. But then it kind of just rebounded and moved past from that. So that's why that not huge dip, but noticeable dip happened. And same thing with Google. You could see that dip a little bit again in the Thursday, but for this week they were actually fairly even, just down 0.15%. Closing at 988.20. And moving on up to the Starbucks stock we're looking at, closed at 54.57. For this week they are down just over 2%. Year to date they almost the same, down 1.7%. Since that bad news that happened maybe a couple months ago, guys, they really haven't changed too much. It was probably in the 60s, then dropped to basically this level. So it's kind of bouncing all over the place, but I do see this rebounding. It might take longer than expected, but I do kind of see this rebounding. They still are growing, and people are crazy about coffee. So given that, it's probably a safe thing. So those were all the individual stocks. Moving on to the mutual fund that we normally look at, Fidelity Contra Fund. They closed at 124.92. Again, you could see that this chart is for the month, but for the past week, they did go up around 0.6%. So overall, a pretty good week, guys. I was happy with it. Again, focus on the long term. That's all I'm going to say. If any type of correction happens, I feel like if anything happens with this tax reform, it could either be good for the market or simply really bad. So stay in with it. If it does go down, I would suggest buying into it. That's probably what I'm going to do. Alright, and that's kind of it, guys. If you have any questions, comments, concerns, leave them down below. I'd love to hear what you guys have to say. What do you think of that Apple news, which was kind of ridiculous? But the new phone is coming out next month. Holiday season, probably doing fine. So that's that. And don't forget to subscribe to my channel, guys. Real Life Money, where we go over real life and money, because not many people are. Thank you so much for watching, and I'll see you in the next one.